Hi, everyone. Welcome to Crowd Forecast News, episode number 182 for May 14th, 2018. Today we will be discussing the 242nd weekly report. If you have not had a chance to take a look at this yet, just go to TimingResearch.com and you can download the full PDF there. My name is David Kosmeter. I'm the creator of Timing Research, and I have Dave Landry back to moderate today. So I'm going to go ahead and turn it over to him.
Okay, thank you, Dave, and thank you to Timing Research and Crowd Forecast News for having me back again today. We have a couple of veterans today, two friendlies, and I think you guys are going to enjoy these two gentlemen. I certainly do. Simon Klein of TradeSmartForex.com. Why don't you tell us a little bit about yourself and a little bit about TradeSmartForex.com. Simon?
Hi, David and David. It's great to be back here again.
Glad to have you
on the show at least once a month, and it's a great show. It's great to work with you guys as well. TradeSmart Forex, or TradeSmart, the website's TradeSmartForex.com, is a trading education business, and we focus on teaching you how to read the market professionally, and how to run a successful trading business. Again, you can learn how to read the market, but again, how do you put that into practice and transform that into running a successful trading business? So that includes developing your own trading plan and strategies that are tailor-made to fit your personality and lifestyle. It's almost impossible to trade someone else's system unless you make it your system first, because you're not going to trust it like they do. And I remember when I was training as a trader, we had a number of people following the lead trader, the mentor, and say there were 10 people following, and the mentor says, okay, let's buy now. And there were like 10 different results. Someone jumped the gun and got in early thinking this is going to be great, I'm going to get in now. Someone paused and didn't get in at the right time thinking, I'm not sure, everyone else is in, okay, now I'm getting in, they're getting late. So you can see there's a system, but you have to make sure that you follow a system that fits your personality and lifestyle so that you can follow it with confidence without having the emotional issues that plague many traders, and especially many beginning traders. So that's what we focus on. We also have a live trading room. We have a weekly preparation session, which is part of the trading room, where we prepare to trade at the beginning of every week. I believe that preparation equals confidence. So we don't trade any trade unless we plan the trade beforehand, and we plan the week beforehand. And every day in the trading room, we trade for around an hour a day, and we plan our trades before we take them every day in the trading room. And over the past month and a bit, we're up around 12% on just taking 1 hour a day of the trades that we take during the US market open. So that's our results so far. So great to be here, and I hope everyone who's listening to this show gets a tremendous amount out of it. There's a lot of high quality information from some amazing traders here.
Thank you, Simon. One of the big controversies of the show, or not controversies, I should say, it's complaints, is that we don't have enough controversy on here. So today, I guess, will be no different. I agree with everything you said. Lots of very interesting things. The plan you trade your plan, and really the battle is really within, and it's mentality over attitude. Or I should say attitude over aptitude, and your mentality is key. So good points there. Jim, let's go over to you. Jim Kenney, another friend of the show that obviously we enjoy having quite a bit. Jim Kenney of OptionProfessor.com. Jim, tell us a little bit about yourself for those of us who don't know you, and tell us about OptionProfessor.com.
Sure. Yeah, it's great to be back with you, Dave, too. With regards to OptionProfessor.com, I provide the content for their 7 option learning DVDs. And with options, there's a lot of different bells and whistles, a lot of moving parts, as people say. And there's a lot of ways to use them, both defensively and offensively. So if you're doing covered call writing or credit spreads to try to bring cash flow into your account, or you're trying to do two-sided trades, which I've been trying to explain to people in the last 3 months, we've had very good opportunities because we're in a trading range to use two-sided trades. And basically, that's another way to go. And then, of course, if you get a stock that gets overbought or extended and you don't want to just ride it down into a correction, you could consider things like married puts and collars to hedge your equity and put parameters around your account. And so there's a lot of different ways to use these options, but without the knowledge, you can't do it. And that's what Option Presser tries to provide.
Yeah, and you stole my line, which I'm sure you've used long before I ever have, but a lot of moving parts, and I would strongly urge anyone who wants to trade options to definitely get educated there. For those of you who don't know me, Dave Landry here from DaveLandry.com. I like to keep it as simple as possible. In fact, other than the occasional moving average, I don't use any indicators whatsoever. And I think you can only predict the short term when it comes to markets, but the real money is in longer term. So what I've done to solve for that problem is I take a hybrid approach to money management. If you go to DaveLandry.com/CFN, there's a lot of goodies there. Get to know me first before you move on to any of the other educational information. And if you put your information in on this website, you'll get 4 videos and you'll get access to all the free reports. And then I'll give you a $100 gift certificate, which is reusable. So you can buy all 3 of my books and begin to get up to speed. Also, I do a weekly webinar. We have a lot of fun. We don't take ourselves too seriously with it, but we do cover a lot of information. I usually talk for 30, 40 minutes, sometimes even a little longer, and wind me up, and I tend to go. And then after that, we discuss individual stock picks, which is similar to Dave's show, which is a newer show, the Analyze Your Trade show that they're doing. So anyway, check all that out. Get started for free and learn about the markets from a trading simplified type of approach. I've actually trademarked that. Simon, let's go back to you. And first question is, it's actually a 2-part question. What direction do you think the S&P will move from, I guess, today's open till Friday's close, and rate your confidence on that by estimating the probability you have correctly predicted this week's market's move?
Well, that's an interesting question this week as the market's starting to look a bit more bullish than it has recently. So, but I think it depends on, well, we'll do that the next question, explaining why. But I say probably 50-50 here. It depends if it well, we'll go into that later, but kind of more 50-50, kind of neutral. Maybe I'd say maybe the probability is slightly higher on moving up, but it may move down this week first.
Well, just give us an up or down and a percentage that you've correctly predicted it. We know you're down here.
So,
there's no evading Dave. You understand that?
Okay, so let's go with down. There you go.
Okay.
Let's go with down and 50% confidence.
50% confidence. Okay, fantastic. All right, Jim. Same questions.
Well, since I'll start out saying that it's our best guess, and that'll take a little bit of the pressure off our shoulders, right?
Yeah.
I think it's a run up here towards this 2750 area ballpark, and I think there's a gap down there around 2100. So, well, having said all that, plus other things, I'm going to say it's going to fade down by the end of the week.
Okay, cool.
Oh, and confidence level would be just a shade above 50-50 because, as we were saying, it is on the verge of possibly doing something big, but I just don't think this might be the week to have it. So I'll go 55%, which will push me over the flipping of the coin point.
Yeah, I'm kind of with you guys. There are some micro things that I'm sort of looking at, like we're a little overbought in here, but the big blue arrow, which I'll discuss in just 1 minute, is still pointing sideways, and I really think it's a crapshoot at best. So I'm just going to say, let me just do something real quick. I'm going to go ahead and say higher, and nothing really fancy about that, just because we're above the 50-day moving average, which I'll show you in just 1 second. And I'll give myself a confidence of about 55%, if that much, but we'll go higher and 55% on that. Simon, let's go back to you. And the third question is basically to flesh out what you just said. So what specific reasons do you think the S&P will be about the same or maybe a little higher by the end of the week?
Okay, so just let me know when you can see my screen.
We got it.
Okay, great. So it's all about, well, basically, let's zoom in on the daily chart here. And again, I'm basically a purely chart trader. I don't really use too many indicators. I mean, almost none actually. I do have the CCI, which I use for a certain type of trading. But if you can see where we are now, and this is E-mini futures, yeah? And that's my view on the S&P 500. And you can see we're kind of been going sideways in this range, and we're up in supply levels here. So after a number of days up, then that's why I said the market may pull back again first. So I'm going to know, I mean, it may continue going above this level as well. So if it does go above and close above kind of this level, then it's most likely to continue moving to the upside. Until then, the odds are probably that we're going to have a move to the downside. And we also are a bit overbought into this area, as you said, David. So it's kind of interesting because if we look on the monthly chart, it's starting to look bullish again. Starting to look like we could actually have another leg to the upside. This is pretty bullish, this kind of formation here. And if we look on the weekly chart, it looks kind of messy. It's messy up and down, but it's not, it doesn't look like it wants to go down at the moment. So it's kind of ranging in here. The longer it ranges, the more the odds are that it may go higher. So on a very short-term basis, as in the next few days or so, it looks like it's going to probably pull back. How far is it going to go? Well, likely maybe go down to this level. If it turns around to the upside here, then it's probably going to break up and go higher. That's the way I'm looking. So the way I look at the markets is this. There are two modes of trading. Yeah, there is what I call opportunity, where it's clear that the odds are in your favor and you can take a trade in that direction. And whether it continues or not in your favor, you can still make money on that trade. And there's the other mode is when the market is in what I call decision making. When it's in decision making, it's like, as one of my trading friends used to say, there's a battle going on between the bulls and the bears, between the buy side and the sell side. Yeah. And you don't want to get caught up in that battle. So she used to say, you know, sit on the sidelines, wait until the winner emerges, and then go with them. Don't get caught up in all the chopping around. Yeah. So this is one of those moments where it's decision making. Are we going to turn to the downside, or are we going to break through? When you're down here, the odds are we're going up. Yeah.
Amen on all that. And I wish I knew the exact quote, but basically Livermore said something along the lines of, those traders are stupid that think that they could be in and out every day as if they're working for a steady paycheck. And he said, if you're patient, those traders that are ranging, I like that term, I might borrow that from you, but those traders that are buying and selling during that range, they're laying the groundwork for your next venture. And once again, not enough controversy. I fully agree with pretty much everything that you said. Once again,
yeah. It's very interesting.
Go ahead.
It's very interesting that you say that, because I've kind of spoken to many traders, and I think the journey to trading success is very similar to for many people. We'll go through the same kind of journey. Some just get kind of caught up a bit longer at certain stages on that journey, you know, overcoming whatever they need to overcome to move to the next stage. But it's very interesting because once you get to the other end, once you've succeeded as a trader and you get to that consistent profitability, then it's a very similar kind of, if you speak to any other trader, it's very similar experiences that they've been through as well, which is kind of interesting.
Yeah, and it seems like we all go through this grail hunt. And I could say, if I was just doing a presentation on deliberate practice, actually editing a presentation where it takes 12, what's the benchmark, 10,000 hours, the Malcolm Gladwell stuff. Eric Anderson, I believe, is the other guy that does a lot of research on this, or Gladwell's research was on his. And I tell everyone, look, we could shorten that learning curve significantly, but it seems like most people have to go through the grail hunt first. They have to reach a point where they find out that nobody really knows what the market's going to do. Not me, not you, or not you, not me, and not the guy who screams on TV.
Yeah, exactly.
As far as the market, one of my concerns, I'm noted for drawing big blue arrows in a chart, and that's simply because my paint program years ago defaulted to that. I was with a another website in the late 90s, and I started drawing these big blue arrows. And I think it's something that you can't lose sight of, and it always amazes me, the net price change. Where is the price today, and where was the price going back a few weeks, few months, or even longer? And it gives you a little bit perspective, and I call it the Rip Van Winkle sleeve test. Pretend first of all the newspaper still exists, but pretend you look at a stock price, a newspaper, or a market price, go to sleep for a few months, and then wake up and look again. And if that price is relatively unchanged, you'll think, well, geez, that market really didn't do a whole lot. And you can see here in the S&P 500, we've had some zigs and zags along the way, but we really haven't gone anywhere since February. So as a trend follower, one of the simplest things, and Greg Morris once said this. Greg Morris used to run about $5 billion or so. Billion here, billion there. It begins to add up after a while. But anyway, he said in order to follow a trend, you must first have a trend to follow. And right now, there's not much of a trend, at least on a daily chart. And yes, we've ran up a little bit here lately. We have been improving, as Simon says. But so far, it looks like we're stuck sideways for a while. Now, if you back the chart out a little bit, you do get a little perspective. I'm glad, Simon, you brought up those longer-term charts. And you can see that this line on the bottom is a 200-day moving average. Nothing magical about moving averages, but there are a few moving averages I like to look at. I look at the 200 and the 50 when the market is trading around those, and the rest of the time I tend to ignore them. I just look at them because they're well watched. And then I also use a 10 simple, a 20 exponential, and a 30 exponential. And I have some patterns based on that, which I can give anybody that's listening in today or watching. Be happy to show you that. It's called a bow tie, and you can find it on my website, or I'll give it to you. But long story endless, I know too late. One simple concept is what I call daylight, or lately we've been calling it Dave light by one of my clients. He dubbed it that. But Dave light is just the lows are greater than the moving average. And one way to notice that is you could actually draw a line in between the price bar and the moving average. And what's pretty amazing about this, once a market begins to trend, now keep in mind that everything works better with trend, but once a market begins to trend, you'll be amazed at how long this can help to keep you in a market. So if we zoom back in for a second, you can see now we have the Dave light above the 50-day moving average. What's pretty cool is if you look at a longer term chart, weekly chart, and let me fix this real quick. If you look at a weekly chart and put in a 50-week moving average, what's pretty cool is that, once again, we had daylight for a long, long time, and we just recently tagged that 50-day moving average. So that's the first day of zero daylight in quite a while, and that was a few weeks back that happened. So far, to put things in perspective, we just came down and consolidated around this 50-week moving average. Now, as a trend follower, when a market has a big slide like this, I will get stopped out of my position. In fact, we have one short on, and there's no remaining longs that are on now. We're looking at a few, but we're waiting for entry. So to put things in perspective, longer term, the market still looks pretty good. Obviously, sometimes you have to, the old hedge fund adage, he who fights and runs away lives to fight another day. So when you have a big slide like this, you get stopped out, so be it. But just real quick, take a look at the NASDAQ weekly. On the 50-week, we haven't even tagged that 50 just yet. So far, this longer-term trend is or does remain intact. But again, we were stopped out a few months ago when the market began to slide in earnest, and that's just the way we play the market. We're willing to get out the way, sit back for a little while, like Simon says, let everybody else fight it out, and then come back in. So longer-term market still looks pretty good. Just let me show you real quick. Russell 2000. Russell 2000 is very sideways, but it's probing these all-time highs in here. Unfortunately, the market's going to have to get to all-time highs and stick before I begin to get excited about it. So as you can see, sideways at best, and then we still have a potential, and I hope I'm wrong. I know you shouldn't use the word hope in this business, but I hope I'm wrong. I'm hoping it takes out this potential triple top in here and goes on to make new highs. The good news is, as a trend follower, I don't have to predict whether or not it's going to fail. I just have to sit back, wait and see if it takes out that triple top and continues higher. And then I've got to figure out a way to get on board. And usually, last point, I know I'm going long here, but usually the way I get on board is I just let the database tell me what to do. And lately we've been seeing a few speculative stocks such as IPOs, and we've been kind of going after those few specific areas as opposed to the entire market or stocks in general. Okay, I know I went a little long. Jim, did you have anything to add? I don't think did we go to you in the market?
No, I just, you know, most of the stuff that you said, obviously, the long-term trend is up. So you people who are holding for the long run, obviously, we're still in a bull market as far as the long-term trend. But you know, what I've been saying to people is listen, when in January, when you run up to 2,900 on the S&P, you have a parabolic overbought deal, and that is one of the explanations why all the earnings that came out and all this great stuff that you hear, you're getting not much action out of it because, in my view, it was discounted in that January move. Okay, now the problem is now, and the problem looking forward is going to be the word valuation. I was just listening to a very sharp guy, in my opinion, he's a sharp guy who does value investing, and he has an analysis going back 28 years. And he says in the last 28 years of data, the S&P is in the 15th percentile, which means 85% of the time in the last 28 years, it has been at a better evaluation than it is now. And on the Russell, it's even worse. It's in the 2th percentile. So 98% of the time, it's been better valuations on the Russell. He says in his research that the returns are rather muted on the S&P in this type of an environment for the next 1 year, 3 to 5%, and the next 2 years, something like 8%. And returns on the Russell would be actually negative looking forward because of the overvaluation. So I think this market has been in a range 2,750, 2,800 on the top end, which is where we're in the bottom of that right now, and 2,550 to 2,600 on the downside. And so as long as we stay in these ranges like that, you know, when we get to the top of the range, you start considering the concept of maybe rolling over. There's a lot of enthusiasm. You know, this quant guy out of JP Morgan came out around 2,600 and change, you know, saying he thinks the lows are in and that we could go 2,900 or better by the end of the year. That's a very big company and a big name who said that. And then, of course, Buffett with his purchase, of course, he did purchase it $20, $30 lower, but his purchase of Apple got everybody very excited. And the oil run up has gotten everybody excited about oil as well. So the enthusiasm is pretty high. We're at the bottom of the trading range, and the short covering may be coming to a close. A lot of people might have got short there or negative. And so, you know, I think this 2,750 to 2,800 area might be a rough racket to get through. And I think, you know, some of these stocks that have been in the news, very, very, very popular, very big runs that are trading near their 52-week highs, maybe be vulnerable up here.
Once again, no controversy. Good thoughts there, Jim. Okay, the next question is, and I think I know what Simon's answer is going to be, and ironically, I might actually have, even though I'm a stock guy, I might actually have the same question. I mean, the same answer. Let me make sure I get the actual question. What have you made the most profit from trading so far this year, Simon?
Foreign exchange. Is that
Okay.
the same as you? The same as you?
Yeah.
Yeah, I mean, I'm primarily trading foreign. I was originally an equity trader. That's how I started out, trading basically New York Stock Exchange, and then I moved to NASDAQ. And because of kind of timing and when my kids get back from school and everything else like that, it works better for me to trade a 24-hour market, even though it's not good to trade it 24 hours because not every session is equal. Yeah, it's best to trade kind of market opens, which are usually around 8 a.m. in whatever the local time zone is. So, example, 8 a.m. London time is when the London Forex market kind of opens, and 8 a.m. Eastern times where the US market like opens, and then there's the Asian market as well. So you can, for me, that works out much better. So I kind of moved to primarily trading the Forex market over anything else. It's just because it works better with my lifestyle at the moment than trading the US equity market.
Simon, where are you located?
Oh, actually, I'm in Israel.
Oh, wow. Wow.
Yeah. I'm originally from
Are you
England.
near the embassy in Jerusalem?
I'm actually in Jerusalem, but I'm not far. It's a very small city.
Yeah, it's a big day for the embassy over there.
Yeah, the U.S. Embassy moved to Jerusalem. Yeah, interesting.
Wow. Wow. How
Yeah.
did you end up in Israel?
Well, I grew up in England in a number of places, Manchester and London, and then I was in university in London. And then after that, I started working for Credit Suisse in London, and then they sent me to New York. So I lived in New York for a while. Then I moved back, and then when we got married, we decided to move here.
Wow.
Yeah, it's a great place.
Is it? I saw where Gary Kaltbaum occasionally puts out a newsletter, and he talked about his trip there a couple years back, and he said there were some incidents that occurred. Are you around any of these incidents that occur, or what's it? I can't imagine what's that like. But just can you shed some light on that?
Since we've been here, we've been through a number of wars and whatever. Like we've had rockets land not so far from where we live. You know, we've actually seen them being intercepted by the Iron Dome, which is kind of interesting. So we've seen them fly overhead and be intercepted in the air.
So your wife's from Israel?
No, she's actually from England.
Okay.
So what was interesting, I have to tell you, this is a kind of interesting story. I was trading once, and I had my headphones on. I was listening to music, and I didn't hear the air raid sirens going off. So my wife came back with the kids, and she went straight down to the bomb shelter. And, I'm still trading through. I didn't hear a thing.
Oh my goodness!
Afterwards, like, why didn't you? Where were you? I said I was trading. I had my headphones on. I didn't hear a thing.
That's awesome.
Yeah.
All right, Jim.
Since he's over in Israel, what do you think of Tiva going from $10 to $20 in the last few months?
Yeah, it also went down as well.
Yeah, but it seems like it's on a bicycle today, up about 6.5%. Huh?
Yeah, I mean it's a massive, I guess, pharmaceutical company.
That's what it is.
Yeah, and they're
all right. So anyway, getting back to the question you had, I've been encouraging people because my view is that we're in a big trading range ever since we had 2,900. So obviously, if you think it's in a trading range and you're looking at option strategies, one strategy I've encouraged people to investigate is the straddle or the strangle, and then rolling them up or down. So when you're up 2,800, 2,850, and then it goes down towards 2,600, you roll it down, then it goes back up to 2,750, you roll it up, and then it goes back to 2,550, 2,600, you roll it down, and now you're back at 2,750. So essentially, doing a two-sided trade on a straddle or a strangle is where you buy or long call and a put at the same time. So you will have a fixed risk to whatever the total price of those two items are. And then, of course, you're going to be dead wrong on one of them, but you could be very correct on the other side. And you know, obviously with the volatility and the rolling up and down, that has not been a terrible strategy this year so far.
Jim, that's been a good strategy, but what happens when that dog metaphorically breaks the leash and you get out of that reversion to the mean type of market?
Well, no, the thing is there's no assurance, of course, that you're going to make a big hit on it like it has been going. But the thing is if you don't get the volatility, then both options can and will go down, and you would lose on the straddle or strangle. And of course, like any strategy, there has to be a corresponding risk to it, and the risk is you don't get volatility, and that's why pricing them out is the key. In other words, you have to.
Well, metaphor. I'm sorry. You're actually looking for a range expansion.
Yeah, I'm buying these. I'm buying the. I'm not. I'm not. Telling people to do it until they investigate it, find out it's right for them, see if they think it's a good idea. At the time they're going to do it. The point is what you do if you want to pursue this is you wait, which is a big thing, wait for the stretch point, and then you price them out, and then you look what type of volatility you anticipate, and if the price of the straddle or strangle makes sense basis the volatility you're anticipating, then you play ball, and you know that you could lose the entire amount on both sides. But if we go from 2,850 or 2,800 down to 2,600, that won't be a problem for you because those premiums will expand. And then if you roll them down, what does that mean? That means you change your strike prices from the 2,800 area down to the 2,600 area. And then basically it goes back up to 2,750. And of course, this is past, it's not prologue. But and then if it goes up towards the lower end, you roll it up your strike prices again. And obviously, when you do that, you should be taking off a big credit and putting on much less amount, so that banks some money. And then
Cool.
when it does not continue, obviously you'll have something in the powder keg for it. But if you're not a believer that 2750 or 2800 is going to be a area where volatility is going to be significant off of it, then you didn't play ball. So, what do you think the market's going to do? Have you waited for a stretch point? Do the premiums look reasonable? And you want to try to make a very aggressive return while risking the principal you're going to put in? And that's
I
the
like the, I'm not a big fan of going short volatility, and I have some war.
No, this is long volatility. Yeah, this is long.
No, that's what I'm saying. I have some war stories with the short volatility reversions to the mean. But I like the fact this isn't reversion to the mean. You're actually looking for that increase in volatility. But if I had to trade options, I definitely would.
Yeah, you're trying to make a lot of money with this type of thing, not pennies or peanuts.
Right, not picking up the nickels in front of the bulldozer with the short options. But no, right. I think it's I find it interesting.
Buying the options is a risky racket, so you've got to pick your spots. And when the stars align, which would be a stretch point where the price looks like it could get significant volatility off of it, and the price of the ticket, meaning the premiums, are somewhat reasonable, and you have risk capital to take a shot, that's when you shoot the trigger.
Yeah, I hear you. Completely. As I alluded to earlier, believe it or not, I made so far this year, I've made my most money in Forex. I believe that you're better off trading efficient markets, such as inefficient stocks. Like earlier, I mentioned IPOs. I'm a big fan of IPOs. We've been in a bull market for the most part in IPOs for probably the last 10 years, and it's been pretty phenomenal. The reason I like more inefficient stocks is everything isn't priced in. If you've got a big, thick company, meaning a high cap company, there's a whole lot of analysts, there's a whole lot of funds that own it, there's a whole lot of trading going on, there's all these derivatives, and everybody tends to cancel each other out, and they tend to chop around more. A big, thick stock in general is not going to make these huge moves. However, in efficient markets, such as Forex, where you have a lot of players, if you're looking to trade around the fringes, that's where you can get an inefficient move. And for instance, I just had the dollar pulled up here. The biggest trade that I've had so far this year would be the euro versus the dollar. I've actually been short that. And here's just the dollar. You can see when the dollar makes a major low, or any other currency or currency pair, look to trade in the opposite direction. Now, I'm a trend follower, but what I'm doing is I'm looking for something like an hourly signal in the opposite direction, because that way I know the most amount of people, or at least the most, are wrong, or they have the wrong opinion about the market. And when that market turns, it's going to help fuel that turn. So I'm not picking the bottom. I'm waiting for it to turn on something like an hourly chart, and I will take a few stabs at it. This is a little bit outside of what I normally do. In fact, my normal nickname is Trend Following Moron. When it comes to stocks, I just try to follow along the best I can. But inefficient markets, I look for a play, usually like on an hourly chart around the fringes. Now, I'm not day trading. I'll put on trades and hold them for weeks and hopefully months or even longer. So I've done the best so far this year in Forex. And then second to Forex, I've done okay in crypto. And I've just been trading some crypto pairs here and there. And I think that's the only problem with that is it's a bit of a what's a good word? Wild west type of market. So I would encourage you to tread very lightly if you decide to dip a toe in there. Maybe dip a toe is the appropriate way to put it. Okay.
Simon, you do any cryptocurrency trading?
I don't personally trade it. We look at it in our trading room, and we're following primarily Bitcoin futures. So we've basically called every single move in that so far, pretty much.
Well, you should be trading it then.
I should be trading it, yeah.
One thing to think about real quick, and I guess we could do this other question here, but if you guys have a trade of the week, start thinking about that now. Let me just put mine up real quick. So you guys have a moment to think. And just by accident, I just pulled up the dollar. I'll show you two things, and both are efficient markets and nothing to get too excited about. But you can see the dollar's had a nice run off a major low. Let me back this chart out a little bit. So it looks like we could just be in the first leg up in this dollar, just a little pullback. It also has a bit of a cup and handle, and it's similar to what I call the bow tie pattern, where they all three come together, the moving averages, that is, after a market begins to bottom out. So long the dollar, short defense stocks, believe it or not, in spite of all the missiles flying above Simon's head, the defense stocks aren't doing so hot over here, at least over here they're not. Big, thick market. The stocks are very high priced. And I think that's probably your best bang for your buck would be, believe it or not, the ITA, which is an ETF. And you can see we had a big sell-off here and a big retrace rally. Yeah, let me see if those moving averages confirm. Not quite exactly a bow tie here. I would only watch this for the next few days, though. If it doesn't trigger, let's say 195 would be your trigger, and then a stop maybe at the all-time highs on here, because if it goes on to make new highs, then you're wrong. So short this, long the dollar, and that's about all I have to offer today. I think if this market gets out of its range, you'll see that I'll start getting more and more aggressive in individual stocks. Simon, do you have a trade for us?
Okay, so let me share my screen with you again. I don't know whether I have a trade, but I have something that may be interesting. And again, I have a maybe slightly different view on the dollar. As you said, that the dollar had a move up from this base. But if we look at the dollar on the monthly chart over here, we're kind of in a downtrend here. We just happen to be bouncing off. Let me show you this area. We're bouncing off this kind of supply become demand zone, and we've moved up. Now, the one thing that may point to the dollar moving higher, and we get bullish once we go above here. Yeah. The one thing that gets, that makes this a maybe slightly more bullish is this bar over here, this failure to follow through to the downside and move up. So this actually might, if the trend's going to continue on the monthly chart down, then it should fall over here. And we started to see a little bit of that happening here. If you look on, you can see this also on a weekly chart. To get bullish, we've got to get through these three supply levels above. And you can see the first one it hit here and we kind of sold off. So I played those trades basically by going long the euro, short the dollar Swiss, and basically these moves down. And but as you said, Dave, if the dollar actually holds this level and turns up, it's pretty bullish. I mean, this is a bullish move. It's basically a move out of this base that we based in for quite a number of weeks, or even a number of months actually, much since the beginning of the year, all the way through till we broke out. And once we break out, the natural market will move up to the next supply level, which it did. So on this move up, you want to be on the short side of the euro, yeah, basically once it breaks. And if you can look over here, if we look at the corresponding market, we look at the euro makes up the majority of the dollar index. Okay, the dollar index is made up of a number of currencies, yeah, and the euro is the biggest percentage of that. And again, it's a very similar thing. If we look at the monthly chart of the euro, we're kind of moving up, and this may be a pullback to demand over here. So it depends what happens in this zone. If we turn around to the upside, which we started to do here, and continue, so I think this could be a possible path for the euro, and we're going to see. I think it's going to initially this week we may actually have a move to the downside. If we hold a higher low without going below here, then that puts it a bit more bullish and we're likely to go higher. And that's the case, the dollar may continue its move down. So again, this is the decision point. Over here, you want to be on the long side when it hits this demand zone on 3 time frames, on the monthly, weekly, and daily chart down here. And this was around, I think around Wednesday last week. If we go and have a look on a 1 hour chart, you'll see what happens. Wednesday, we hit the lows. And this is where we turned around. Now, if you miss this move, you can buy the pullback. So you want to be buying pullbacks, and you get a nice kind of move to the upside until we kind of hit supply on the daily chart, which we're in now, which is why we're kind of turning to the downside. But I think if we're going to go higher, as I said before, this move down may be viable. So this is very interesting. And again, watching the euro, watching the dollar, it affects all other markets that are connected, like gold and oil and especially, commodities are affected by the movements of the dollar as well. So it's all connected. You want to watch the euro and watch the dollar and see what's happening in the commodities as well. So
I find it interesting that oil is headed higher in spite of the strong dollar. And that's kind of interesting when you get that. I haven't done the research, but usually when something is not acting as it should, you get a real move out. Like I'm not a big fan of seasonals, but when you get a contrast seasonal move, for instance, a lot of times that's the real deal.
Yeah, it's like what we call it. It's on its own page. It's not affected by things, by the dollar or something else. It's kind of doing its own thing, and that's usually get a very strong move. So oil is very likely to continue moving up and maybe get back to the 100 area. That's where it kind of came from in this big move down, and we're kind of slowly moving back in that direction. So oil's pretty bullish. But if we look at gold, for example, let's put up gold futures. Seem to have, where's it gone? Here we go. Gold, on the other hand, if we look on the bigger time frame here, look on a monthly chart, we can see it's kind of just going sideways. It's been going sideways for the past few months. Sideways at the highs. If we break above these highs, then we're going to have a run up. Gold will have, potential big move up, maybe back to the 1600 area. And if not, then we're just moving sideways at the moment. We could move back down here as well to around this area.
Cool.
So again, this is the way I trade. People say, you don't need to know what the market is going to do. That's impossible. No one knows what the market's going to do. We know what the probabilities are. What you need to do is know what you're going to do when the market does something that you recognize as an edge in your trading plan. Yeah. And that's the key. And you don't need to predict the market. You just need to do what you do, which has hopefully a positive expectancy. You've tested what you're doing over time. And if you keep doing it in a consistent way, you should get consistent results. That's kind of the paradox of trading, when you don't know what the outcome of any particular trade, but yet you can be consistent.
Yeah, I do a lot of research. I mean, once again, no controversy. I do a lot of research on outcome biases, and I stop short of calling it behavioral finance, but more of a trading psychology type of look. And that's the hard part. I recently read Annie Duke's Trading in Bets, and I would recommend everybody read that book. And the hard part is separating luck from a good decision, because sometimes a good decision, as you know, can have a bad outcome. And that outcome bias, we're all a little guilty of being victim of that. Simon, I was going to skip this question. I'm not a big fan of news. I'm not sure what good it does for anyone, but given your location, I think it might be worth asking. Do you support the decision of President Trump to withdraw the United States from the Iran nuclear deal?
I'm going to pass on that question because it's kind of a political question, if you don't mind. Any questions on trading? Perfectly fine, But yeah, I'd rather not get into like political things. I mean,
no, that's fine. That's fine. Let me just throw my 2 cents in. I'm going to pass too. I'm not a big fan of. I try to avoid all. It amazes me that people go out there and they're all political. It's like, well, you just ostracize half your clients. So a lot of people often guess my views, and they often guess completely wrong. So maybe I've overcompensated for that. But I do believe you should probably ignore, or not you should probably, you should ignore all news when it comes to trading. Obviously, if you're doing something in Forex, if there's a big report coming out and you're day trading, it's probably a bad idea to put your position on right before it. But as a general statement, I pretty much ignore all news, especially in stocks. Jim, just because we asked the question, do you want to chime in on that, or are you going to leave it alone? Jim, the question of Trump, do you want to chime in on that? Do you support the decision of President Trump to withdraw the United States from the Iran nuclear deal?
Hey Jim, you're muted. Might need to unmute
muted. That's all it is.
Can you unmute it? Or I did. Hello? Yeah. Can it work now, or?
Yeah, we can hear you. Go ahead.
Okay, yeah, like I say, I think that's fodder, trying to get involved in anything like that. But I did want to say something about the U.S. dollar, because I had been hearing and watching and what people are saying. And it seems to me that on that euro, this 115 to 120 area might be a very big area to see it may turn to the upside, and maybe pretty good to the upside. Because right now, I think the reason it faded is there's been a focus on the interest rate advantage of the U.S. over the other countries. And I think that brought some money into the U.S. and obviously into the U.S. dollar. But if this was really a strong move that's going to stick, I don't think gold would be able to hang at 1,300 as long as it has. And I think gold's waiting for two things: a weaker dollar and some inflation to show up. And it's probably a better than even chance that both of those things may occur down the road. The shift could easily go from the interest rate differential to the fact that the deficits are going through the ceiling and that the borrowing is going at record pace. So we are back to, deficits, and borrowing and borrowing and borrowing. And generally, that's not the best news for your currency. So if this 115 to 119 area holds up on the euro, it wouldn't shock me, and I've heard some people say this, that you could be, 10 cents higher or better further down the road on the euro. So that I just wanted to add that because I had been listening to some fairly informed people, and some of the cases that I've heard seem to be rather reasonable. And so this dollar index, if it gets up any higher towards 94, 96, might be the end of the story on it. And then as they do, traders may start focusing on the deficits and the borrowing as opposed to the interest rate differential. And that's all I had to say on that.
Yeah, Jim's used to looking at all those moving pieces and understanding them. That's good stuff regarding gold and intermarket analysis and all. I haven't really put all that together. That's pretty cool. So thanks.
Yeah, because if this dollar was really picking up steam and it was going to stick, and the inflation numbers are still going to stay at these anemic levels, in my view, and I've been involved with gold for a long time, I don't think it'd be hanging around this neighborhood. I think if it breaks 1375, 1400, like I think Simon was saying, going up to that 1600 mark is not an unreasonable forecast.
Gotcha. Jim, for the trade of the week, we were talking about those straddles and strangles. So do you have anything you want to add on that?
Well, no, the other thing I would say that people might look at is a couple of things. One is the, I think one person characterized it as the enthusiastic, or shall we say the people are very happy, so they're not caring about P ratios or anything, and people are extremely happy with Apple, and they're very happy with the oil shares. So if you could find a chart formation that you think you might be seeing some exhaustion, there seems to be some gaps underneath some of the tech stocks and some of the oil stocks, and the premiums, probably have come down quite a bit on them. And the enthusiasm level is certainly very high. And we are near or at 52-week highs in these areas. And so if we're not going to bust through this 2750, 2800 area, and it's going to pull back towards 2100 or something like that, then there could be an opportunity for a bit of a rollover in some of the, shall we say, happy faces out there in some of the tech names and the energy names.
Jim, while you still have the floor, let's go ahead. Do you have any closing thoughts or anything else you want to tell us about yourself or the markets or optionprofessor.com?
Well, like I say, at optionprofessor.com, you can get access to the DVDs, and I basically would tell people that investigating and learning about how to use these options in your trading may not be the worst thing in the world. Some people, they like to buy a stock and then have some kind of a put strategy in case the bottom falls out, or maybe some type of a collar strategy if they have a large position, so they have some parameters against something happening. Because news can hit any market, basically. They're talking about the Qualcomm deal being back on the table over in China, and ergo, they're getting volatility on that. So sometimes having a hedge using these options is not the worst thing in the world, but you have to learn how the strategies work before you can play ball. So optionprofessor@gmail.com. You can get more information. And again, Dave, thanks a lot for having me here, and David as well.
Glad to have you back again, Jim. Always glad to, always happy when I see your name on the list. Simon, same thing goes for you. I don't know if you emailed me a while back and I forgot to reply or not, but either way, I wouldn't mind. I need to reply to you, and if not, shoot me a new email so I have your email. And I'd like to get in touch with you on a couple things regarding some of the things you said earlier about the markets and all. Simon, Klein, anything else you want to tell us about markets, trading, you or TradeSmartForex.com? The floor is yours.
Okay, great. So if you want more information, you can see I'm sharing my screen again. You can go to my website, TradeSmartForex.com. That's with the number 4 and then the next.com. And again, there's a little video here about 15 minutes long, which will take you through the steps of how to build a profitable trading strategy. Again, if you've got an idea and you want to translate that into a strategy, this will give you an insight in how to make those steps, step by step, how to do it. I also have like you can come and join our trading room, or we've got a weekly preparation session over here, which you're welcome to join. And you'll get our analysis and supply and demand zones on the markets before the markets open every week. And we also have, if you subscribe here as well, you'll get onto my emailing list and email list. And we put out a video once a week on our forecast for the US dollar, for the dollar index, and that can help you with your trading going, especially if you're trading foreign exchange during the week or whatever you happen to be trading. And it'll give you an insight how we analyze the market and how we look at what may happen and prepare ourselves ahead of time. I always believe to be one step ahead of the market. I actually wrote a book called One Step Ahead. I didn't publish it yet, but it's written. It's called One Step Ahead. And it's
get it out. What are you waiting for?
It's like, yeah.
That last 10% is 90% of the work. So in case you're wondering if it's just you, it's not just you. That last 10% is a killer.
I think I started it about 8 years ago. It's like, and basically, if you can be one step ahead, if you think of it like this, no one knows what the market is going to do. But if you can map out all the possibilities and then wait and see which one plays out and have a plan of action for whatever you're going to do in each of those scenarios that may plan out, then you're prepared for whatever the market can do. And there's nothing that market can do now is going to surprise you because you're prepared for every possible outcome. And if you decide that if the market does something that, you don't want to trade, then you just don't trade it. But if it does, say, 3 of the 10 options that you're ready and willing to trade and you have a plan for how to trade them, then go for it. You just wait for the market to do something. So I always say, instead of chasing the market, let the market come to you on your terms and conditions. If you go and chase the market on its terms and conditions, you're in a losing game. You're not going to win.
Yeah. Amen. Again, not enough controversy. Thank you so much, Simon.
Hey, Dave.
Thanks so much, Dave and Dave.
I just was going to add one thing because I'm no stranger to placing a bet. The Supreme Court passed sports gambling is legal in all the states now. So some of the gaming stocks that have exposure in Atlantic City and the other states are getting quite a bid today, and some of the volume is twice the normal volume. So that's kind of a big news. Sports gambling, you can get housewives doing it under certain circumstances, and so there could be quite a bit of business there. That Super Bowl brings in a $1 billion handle or something.
Wow.
And so now all 50 states and God bless the Supreme Court, huh? Now they've got everybody gambling on sports. So thanks for that, Supreme Court. But anyway, some like we need that, right? The gaming stocks that have exposure outside of Nevada seem to be getting some activity today. So it might be something for people to monitor because I think that's a pretty big announcement by the Supreme Court today.
Cool. Okay. Once again, Dave Landry here, DaveLandry.com. If you go to DaveLandry.com/CFN, I'll give you enough information to keep you busy for a long, long time. Get to know me first, as I said earlier. And again, I'll get you a promo code so you can get all 3 of my books. And then you'll get the first 4 videos from a course I have called Trading Full Circle. And you should learn a lot about the methodology from that. And a lot of people have emailed me and said most people just put out a couple teaser videos, but you actually taught in those videos, and I did. And it's pretty good if I say so myself. Another thing, I'm such a nerd, but I'm so excited about this. I'm working on a learning management system. I get all these questions when I wrote my 3rd and maybe last book. I think I was up to about 30 or 40,000 emails answered. And I have a lot of good information on my website, and somebody once told me they wanted to know why I hide it. So this learning management system, there'll be a nominal cost for this, but it's going to bring all that to light. And all these thousands of questions that I've answered over the years will all be there. And it's anyway, I'm such a nerd, but I'm pretty excited about it. If you go to DaveLandry.com/CFN, put your information in, you'll be notified when that learning management system is up and running. And I am taking some beta testers now, and you'll get free access to everything that's in the members area. So shoot me an email if you want on that. I do answer my own emails, davelandry.com/contact. Once you go there, I'll give you my personal email. And again, I do answer my emails, sometimes eventually, as I alluded to a little while ago, but I will personally answer each and every email. Look, great show again today. Simon, Jim, I appreciate you guys coming back. I'll let Dave Cosmeter close it up. Once again, thanks to Dave Cosmeter, Timing Research, and Crowd Forecast News for having me back once again. Thank you, guys, and thank you, David, once again.
All right. Thanks, guys. For everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. You can also go to TimingResearch.com to get access to any of the past reports or any of the past show archives. And be sure to join us tomorrow, May 15th at 4:30 p.m. Eastern Time for the 34th episode of Analyze Your Trade. Jim will be back for that one. Also, Mike Bassani and Michael Filagera will be here. And I just want to thank my guests again for this week. Simon Klein of TradeSmartForex.com, Jim Kenney of OptionProfessor.com, and Dave Landry of DaveLandry.com. Thanks, guys.
Thanks, David.
Thank you.
Thank you.